Just for the record, this went to air almost a decade ago on the 19th of July, 2013. And in case you're new around here, Tesla stock has split twice since this went to air. So split adjusted, this price target of $200 is actually $13.33 per share. Tesla stock was around $8 split adjusted when this aired. Andrew here, in the media, in essence, expecting Tesla stock to approximately double from that point in time. And last I checked, $13.33 is a lot less than Tesla stock's currently trading for.
Go ahead, make the bull case for why people ought to buy Tesla shares.
Well, Tesla's pretty much, they're growing really, really fast, and investors will pay for profitability and for growth. And if you look at Q1, Tesla grew about 1,700 and something percent. And there's a lot of potential for this company to continue to grow and for the company itself to double and double and double again.
Can we just take a moment? I'm a big fan of giving credit where it's due, especially when that credit is due to people saying things that sounded at the time completely insane. I mean, Andrea was one of the only analysts on Wall Street this bullish on Tesla who understood. She's talking about exponential growth here, double and double and double again. It's almost as if she'd done her homework. Recognized that the cost of these things will continue to decline over time, meaning more consumers can afford them, and the flywheel would be underway. And as we watch through these videos, ladies and gentlemen, think about the same kind of stuff we're hearing now. The narrative, has it changed? Are there still people skeptical that Tesla can continue to grow and double and double and double again? By the way, what happens if we do double and double and double Tesla again? Let's pick their deliveries, annualized rate of about 2 million, double it, 4, double it, 8, double it, 16 million. Isn't that interesting? Call me crazy, but I harbor a suspicion that 10 years ago, Andrea had a better grasp on Tesla's future than many analysts do today. That's embarrassing.
So what kind of growth are you talking about when you mention 1,000%? Because when you look at their actual earnings, they would have lost money if they hadn't counted some of those tax credits, as well as shifting around some of the loans and the repayments that they made to the U.S. government.
You're absolutely right that the margins on Tesla's vehicles are, they're an area of focus for investors. And so over the course of this year, what investors need to see is that those margins show steady progression upward toward 25% gross margin. And
just from the future, literally, just in case you're wondering, Tesla's gross automotive margins today hovering around that 25% mark after massive temporary price cuts. So investors did see that steady progression toward and then beyond 25%.
And I think Tesla will do that. The long term is, okay, they do 20,000 vehicles this year. The long term is maybe 200,000 to 500,000 vehicles at a much lower price point.
By the way, nailed it. And just for the record, this was before the Model 3 platform was even announced. I mean, again, this went to air in 2013. At
a 25% gross margin, that would get you to about $15 in earnings per share at about 500,000 units per year sold. That's the long-term thinking.
All right, so this is based on Tesla selling 500,000 units. Now, we know that Goldman Sachs came out yesterday. They lowered their price target on the shares of Tesla to 84. You've got a price.
That's right. Old Man Sachs, 2013, with Tesla stock around $8 per share split adjusted, lowering their price target to around $5.50 split adjusted. Miss James, on the other hand, extremely bullish on the company. Of course, the price targets themselves are a bit of a sideshow. The real question is the underlying reasoning behind these price targets. For example, Tesla growing volumes to around 500,000 vehicles per year, around a 25% gross automotive margin, versus Old Man Sachs, far more skeptical of Tesla's ability to double, double, and double again. Once again, I just want to remind you guys and girls that in 2023, we're hearing the exact same lack of reasoning for some of the geniuses on Wall Street. Moron Stanley still thinking Tesla's going to do about 6 million vehicles in 2030 per year and have a price target reflecting that. The point that I'm getting at here, Tesla has been and continues to be a largely misunderstood, if at all understood company. And this has been the case now for more than a decade.
Price target of $200 a share. Joe McAlinden, that's a gap you could drive a Tesla through. How is it possible? Is this just an example of what happens when you have irrational exuberance chasing a stock?
It's funny you should use that term, Tim, because you'll recall when Alan Greenspan used that phrase, it brought on a bit of a market correction in 1997. But the next 2 years, kind of like the taper correction. The next 2 years, we went into one of the frothiest markets in modern history, with the dot-com stocks going crazy, selling at 100 multiples of 100 times earnings. And we're seeing that today, I think, in a lot of areas. I'm not an expert on Tesla, and Angela may be right. This may be the greatest stock in the world.
Well, with the benefit of hindsight, Tesla up about, 15x since this went to air about a decade ago. Probably was one of the best stocks on planet Earth to own at the time. And just between you and I personally believe that still remains true to this day.
Well, when I very first came into the business, many years ago, bowling alley stocks were selling at over 100 times earnings. The early transistor stocks were selling at 100 times earnings. And by and large, the average one of those that you would have bought wouldn't have worked out very well, especially like in 1962, in the middle of the Cuban Missile Crisis. They all got hammered.
Andrea, what could go wrong with your thesis for Tesla?
If it were a foregone conclusion that Tesla was going to sell 500,000 vehicles a year, the stock would be a lot higher than it is now.
Once again, just got to jump in here and say the same thing is true today, except regarding 20 million in 2030. Again, more on Stanley. Just a couple of years ago, thought Tesla might get about 3 million in 2030. Then bumped it to 5 or so, and now it's around 6 million. The same point remains true today. If the stock market thought it was a foregone conclusion that Tesla would be selling around 20 million vehicles per year in 2030, Tesla stock would be astronomically higher today than it currently is. And that's not including anything to do with autonomy, or energy, or the humanoid robot. Of course, it remains to be seen if Tesla can actually scale up to 20 million vehicles per year, but if they do, there's a gigantic gap that will close between perception and expectations versus reality. That gap is called opportunity.
I'm saying it's a $300 stock if they max out the factory. I'm haircutting that for the execution risk. I'm not saying there's not risk, to $200. And the question, I think, is can this management team manage through the obstacles facing them as they grow into becoming a much larger automaker? And
as I say, hindsight is 2020, and guess what? Tesla's management team executed near flawlessly, which obviously means that they're not going to be able to execute any of their future goals, right?
And I think the answer is yes. So far, this management team has proven that it can be trusted to sort of manage through whatever might come up.
Well, let me just ask you about the management team and Elon Musk. They recently did a secondary that was underwritten by Goldman Sachs and Morgan Stanley. Elon Musk took $50 million out of that, but he also borrowed money from Goldman Sachs in order to participate in the secondary offering. Does that make any sense?
To me, it's like a small business owner who mortgages his house to fund his small business, only this is not on a much larger scale. I mean, he does have skin in the game. He's basically betting everything on the company, and that seems to make sense to me. Most of his assets are illiquid, so he would have to borrow to put the money back in.
Andrea, what about the sales comparison to the Toyota Prius? We're talking about Toyota, which has an extensive dealer network. Tesla has no dealer network to speak of. When you compare the two, the Prius, I think they're not even selling 30,000 cars a year. How do you get to 500,000 with Tesla?
Valid question. In the old world, especially a decade ago, it was unheard of for an automotive company not to use dealership networks to fuck their customers over, to mark up their products, and to make the experience of buying a vehicle very uncomfortable and unpleasant. Of course, 10 years later, we can see that this worked out rather well for Tesla. In fact, by deleting dealerships, Tesla has streamlined, improved, and increased the profitability of their business substantially. If you're a regular viewer, you remember just a few days ago, we heard a literal moron in the mainstream finance media explaining how GM's dealership network was an asset, not a liability. Again, you can't fix stupid. So the point here, 10 years ago, observations, Tesla's doing stuff very differently. They don't have dealers, is this good or bad? How are they going to scale up their production? No, I don't understand. Lots of valid questions that have since been answered.
I haven't seen those figures, so I can't verify that. I'd say, look, the BMW 3 Series is doing, I mean, that's what I comp Tesla against, is their peers. The BMW 3 Series is doing more than 460,000 vehicles a year. The global auto market for the Gen 3 vehicle, Tesla's next generation vehicle, I'd say is about 10 million. So they got 2% market share. They'd sell 200,000.
Now remember, this is before the Gen 3 platform was announced. It's on their master plan, so I know there will be a subsequent generation, but no details, no information. And the best guess there, potential market size of a few 100,000 vehicles per year. Well, spoiler alert, this was massively off the mark to the downside. It seems the market potential for these were already around 2 million. This is almost entirely Model 3 and Y. I believe over the longer term, this could grow to 3 or 4 million units per year.
And then finally, I'd say hybrids are priced at a little bit of a premium to their peers, and Tesla's cars are not. You get a really good car for the price you pay. That helps them on the demand side.
And you think that they're going to be able to maintain these current margins? I mean, the car that Tesla sells comes in at a price tag of about $100,000. They're really going to sell 200,000 automobiles at under 50,000? I mean, Porsche has a Boxster. They only sell about 10,000 units a year.
So I love that you brought up Porsche. Porsche's gross margins are 38 to 40%. So talking about a gross margin of 25% for Tesla is not unreasonable, first of all. Second of all,
but Andrew, I just got to tell you that Porsche only sells 150,000 cars a year, and that's in the best year it's ever had.
So let me explain what's going on here. Anchor is thinking, well, 25% sounds like an extremely high margin. It's 2 or 3 times more than any other automotive manufacturer makes on average. The exception, of course, being Porsche, but Porsche sells cars that add inches. Every $100,000 or so will add 1 or 2 inches to your height or your dick, whichever you need. They have a very limited market. How in the flying f*** will Tesla make 25% on a vehicle that is a fraction the cost of a Porsche? And spoiler alert, the answer is Tesla driving their cost down EVs new technology, which we've seen come to pass. That was the answer. And by the way, I'm not being hard on the anchor here. He's asking good questions. It's not his job to know. It's Andrea's job to know. And no, she certainly did.
150, and you're talking about 500,000 for Tesla.
You need to break down price points and volume. And we can do a table, but we can't do that here on TV. So what I'd say is you got to look at market share. And then you asked about gross margins, and you want to see the gross margins increase for Tesla. Their factory is not at peak efficiency right now. The truth is that most of us have not seen the P&L for a new auto line starting up, because usually when a new auto line starts up, it's buried within the P&L of a much larger automaker. So Tesla's P&L gets a lot of scrutiny, as it should, but it doesn't mean that they can't grow the gross margins, can't achieve the gross margin targets they're targeting, and I have breakdowns, of course, in my published research reports, or that they can't scale on volumes as well. The global auto market is like 76 to 80 million cars a year. So we're still talking about rounding errors here when we talk about Tesla's target units.
And now this quick clip title, Tesla stock is off to a rough start in 2015. By the way, let me know in the comments below if anyone watching happened to own Tesla stock back in 2015.
Look, when you look at Tesla, it's gotten off to a pretty rough start in 2015, down at least 5%. And over the past 12 months, it's basically treaded water, even as the broader market returned more than 16%. Of course, if you bought the stock when it IPO'd at 17, you're sitting pretty. But today's chart shows how fundamentals are starting to drive the share price. Let's take a look. The yellow line tracks analyst estimates for Tesla's first quarter 2015 sales.
So, interesting chart here. On the right, Tesla sales here, these aren't in hundreds of thousands or millions, they're just literal numbers. There was a time in 2014 when consensus analyst estimates for Tesla Q1 2015 deliveries were a whopping 1,350, not thousand, just units. That's the yellow line, peaking around 1,350, and then as more data became available, plunging to around 1,050. Bit of a correlation, at least through most of 2014 to 15, with Tesla's stock price versus consensus sales estimates. Of course, these two things shouldn't particularly be correlated. Analyst estimates don't mean shit. The only thing that matters is what actually happens. I'm not saying there isn't a correlation, I'm just saying there shouldn't be one.
Steadily been ratcheted down. It's now at just over $1 billion. The white line tracks Tesla's share price, which peaked at $291 in September and has been losing ground ever since. Today, Bank of America analyst John Lovallo cut his price target on the stock to 65 from 70. Not surprisingly, he already had an underperform rating on the stock.
Scarlett, a call of $65 when the stock's above $200 means the analyst expects a drop of almost 70%.
Yeah.
I wonder if the analyst's credibility took a hit of 70% after this abomination of a call. Remember, all of these numbers are split adjusted. If you want to know the simplest way to convert them, divide by 3 and then 5. That was the two stock splits, a 5 for 1 and a 3 for 1. A $75 price target, split adjusted, $5 per share. Tesla today around $200 per share.
You look at the Bloomberg terminal, no one even comes close with the second lowest price target, what, around $120?
Yeah, put it this way, Mark. There's a $335 gulf between the highest price target in a Bloomberg survey of analysts and this most recent revised price target from Bank of America. The turn in the stock may have come last September, but the fourth quarter earnings report from the company earlier this month was reality check. There was an unexpected loss in the fourth quarter, a larger than expected CapEx plan for the year, an overly rosy outlook in China. Bank of America's John Lovallo says that Tesla's using a strategy of issuing long-term targets that are intended maybe to offset or distract from a steady stream of negative news. And
the reason Tesla issues long-term targets is not to distract. It is in fact to direct attention to what matters, their long-term goals. The short-sighted nature of Wall Street never changes. This was almost a decade ago. The reason Tesla's saying 500,000 vehicles by 2020, which is what they were saying back then, is because that's what they're aiming for. If Tesla has, quote, a bad quarter, Wall Street shits the bed, investors panic, dump the stock, and Tesla's like, hey morons, remember we're still on track for 500,000 a year in 2020. We're just, these bumps in the road, there's going to be more of them. That's why we keep pointing out to the long term, not what's happening this quarter. We will let you know if at some point in the future we no longer feel confident we can hit 500,000 vehicles delivered in 2020. But if that doesn't change, then keep the eyes on the prize, which is the long-term goal. Tesla's intent, not to distract people with long-term goals. But Wall Street often far too short-sighted to realize this. Oh, speaking of long-term goals, what's Tesla still reiterating they're aiming for in 2030 today? Oh, that's right, 20 million vehicles in a single year. Is Tesla saying that to distract investors or to remind investors to keep their eyes on the prize?
Weak financial results that include a cash burn, long-term goals like diversifying into home battery systems over the next 6 months, which Bloomberg View columnist Edward Niedermeyer calls a distracting dead end.
You guys know Edward Needledoodle, right? I forget how to say his name. You know the guy, the perma bear on Tesla. His entire life revolves around being anti-Tesla. He's still at it today. I suspect the guy's dealing with some personal issues that he's yet to process. Don't know what the cause is there, I'm not going to speculate, but clearly, to have a near decade-long track record of being extremely anti-Tesla and dead fucking wrong at every step, beggars the question, why? The answer, of course, is underlying issues, in my opinion. It's okay to be wrong about things, but to be wrong for the span of a decade straight, and to at no point go, well, hang on, I've been wrong every step of the way on everything I've ever said about this company. I think something's wrong with me and my predictions. To not have that epiphany, I'm just suggesting that maybe something's going a little bit wrong there. Edward, coming from a good place, but bro, maybe some psychedelic-assisted psychotherapy might help. Some Tony Robbins books. If you guys are interested, look up some of the comments from Edward over the last decade regarding Tesla. I suspect Edward may have a humiliation fetish. In which case, carry on, sir.
Yeah.
But maybe, Mark, looking at Tesla as a normal company could be the mistake here, because Niedermeyer writes in Bloomberg View that, like space travel itself, buying a Tesla or a share of the company isn't something you do because you expect it to return some specific return, but because it appeals to some deep human need for adventure. But that adventure may just cost you in the end.
Okay, but Scarlett, talk to me about the bullish argument here. Demand's not a problem? Is that what they're saying?
There's a lot of value in looking at these historical clips, and again, the primary reason is because we see the same questions, the same skepticism a decade ago, since disproven, yet still coming up today. The question, of course, so there's no concerns about demand? You mean there's really a market there for a few tens of thousands, maybe hundreds of thousands of electric vehicles per year in the distant future, really? And again, I'm not being a dick to the anchors here, they're just having a discussion. But the point is that this discussion is still occurring today. Again, more on Stanley, Tesla, 6 million or so EVs by 2030. How many morons do we recall just a few months ago when Tesla was close to $100 per share, losing their fucking minds, panicking because suddenly, oh my god, there's demand problems after all this time. After the first 15 years, finally the day has come. There's demand problems.
Well, the bullish analysts will say that demand's not a problem. Stifel Nicholas makes that point, and they have the highest price target on Tesla with $400 over the next 12 months. But the pushback from Bank of America and other skeptics is that the economics of electric vehicles are not as compelling as investors may have priced in.
These comments, of course, manifestations of small brain syndrome. One of the fundamental errors a lot of people have made in the past and continue to make today is that the price of electric vehicles will remain exactly where it is today. And of course, if the price is here and the price needs to be here to sell more vehicles, you've got a problem. This is why thinking is important, even if it hurts, because when you actually do the thinking, you discover that EVs are a new technology. There's potential for huge cost declines in not only the actual hardware to manufacture the vehicles, how the vehicles are manufactured, the components that go into them, but importantly, the computer, and even more importantly than that, the battery. If you do that thinking, you realize, oh, hang on, if they make more, there's economies of scale, technology's new, so there's more innovation, costs can come down, and the battery costs are predictably declining over time. Oh, so that means that now that I've done the thinking, which did hurt, by the way, but it was worth it. No pain, no gain, right? I've now gained some insight into the fact that the cost of these things will keep coming down. Therefore, they'll be able to sell a lot more of them. And again, I bring the conversation back to the present moment.
I need to see your demand analysis. I don't understand. How is Tesla going to sell 20 million vehicles per year?
Remember the whole half-price compelling electric vehicle they unveiled at Investor Day a couple of weeks ago? There are still people today for which the penny has not dropped.
I don't understand. What does half price mean? What is it? Where's your demand analysis?
Customer deposits on the balance sheet, for instance, reservation payments, are not the best gauge of demand because they're influenced by vehicle mix and regional distribution. So the issue perhaps is a lack of demand, and Tesla appears to be pulling back on production, according to Bank of America.
Morons. Bank of America. Morons. In 2015, these morons were claiming, falsely, I might add, that Tesla was pulling back on production, slowing down their growth because of a lack of demand. You f***ing idiots. I love the internet. Never forgets. I'm always happy to give credit where it's due, and I'm always happy to relentlessly roast people who made extremely bad calls. Once again, had Bank of America only engaged their brains and done some thinking, they wouldn't have said something so embarrassing. And again, I mean, I have to bring it up again. Just a few months ago, people losing their minds thinking that demand was now an issue. I just can't.
Scarlett, I got to ask you about the China reference you mentioned ago, because you said overly optimistic.
Yeah.
There was some concern that charging might be difficult in China, right?
Yes, and that perception has led to a big drop-off in actual sales in China.
Yeah. Okay. A few years after this went to air, first deliveries from Tesla's Shanghai factory began. I think they must have solved the issues with charging in China. By the way, remember, again, got to bring it back to the present day. How many comments have you heard in the last 12 or so months from analysts claiming that there's issues with demand? China demand is collapsing. Same shit, different day. First, credit where it's due, Andrea James, absolute legend, a super forecaster, almost like she had a time machine and could see into the future. Although this is as much a compliment to Andrea as it is an indictment on many of her so-called colleagues who were working on Wall Street at the time. Hopefully most of them have since resigned in disgrace, who just didn't understand Tesla. It's not that Andrea is a genius, it's just she could see things that were relatively obvious that somehow others missed. As far as I recall, correct me if I'm wrong, I've seen a few interviews with Andrea over the years. I'm pretty sure she ended up leaving her job as an analyst, and one of the key drivers for that was so she could buy Tesla stock, because while she was working as an analyst, there was a conflict of interest. She wasn't allowed to buy stock she was covering. That's a bullish signal. In fact, I'm going to make a very bold call. Those few analysts who truly do understand Tesla stock in the coming years will be dropping like flies, leaving their jobs so they too can invest in the stock rather than just talk about it. That's the most bullish indicator you can possibly find for an analyst understanding the stock, is that they resign so they can actually buy it. In all seriousness, think for a moment. If you are an analyst on Wall Street, I don't know, maybe you're making $500,000 a year, maybe in a good year you might make $1 million plus. Unless you have a major spending problem, you should have quite a nest egg available for investing. Let's imagine hypothetically you think to yourself, I see a realistic path to a 10x on this stock over the next decade. How much is my salary again? How much cash do I have saved? How much would I make if I invested in Tesla? Oh, okay. Yeah, this, I'm quitting. Andrea ain't the only analyst. If memory serves, Tesla's current head of investor relations used to be a stock analyst covering Tesla as well. Next minute, joins the company. Fancy that. I thought it was great to go through some of these comments, not only to give credit where it's due, but also to mention and point out, to highlight and emphasize some of the same arguments we're hearing today. Tesla's goals are lofty, ridiculous, just a distraction, stock pump, etc. Concerns about demand, concerns about China. How could they possibly sell so many vehicles? That doesn't make sense. They're too expensive. On and on and on and on and on. The more things change, the more they stay the same. There's obviously only one logical conclusion we can draw from this video. Andrea obviously drinks Athletic Greens AG1 every day like I do. That's why her brain works, and that's why her brain was working a decade ago when she seemed to understand the opportunity that Tesla represented when few others did. But in all seriousness though, you guys have got to try Athletic Greens AG1. It's an excellent way to fill in nutritional gaps, which everybody has. 75 high quality vitamins, minerals, and whole food source nutrients. It has prebiotics and probiotics, digestive enzymes, and adaptogens to help you cope with stress. Such a simple habit, 1 scoop once a day, every day. It's that simple. Athletic Greens AG1 will have you feeling and performing your best. And if it doesn't, there's a 90-day money-back guarantee. So what's the worst that can happen? Plus, if you use the link at the pinned comment or head to athleticgreens.com/SMR, get yourself a 1-year free supply of vitamin D3 and K2. And if, after a few weeks on Athletic Greens AG1, you still haven't figured out the opportunity that Tesla stock represents, you may in fact be a lost cause. I can't help myself. Once a troll, always a troll. Here are what some viewers of the channel have to say about their experience with AG1. Day 30 of AG1, and I cannot explain to you how much better I'm feeling. My social anxiety is so much better. I did not expect to help so much, but it has. I feel energized, ready to do things. I've been staying on top of things for the first time in years. If you haven't tried it already, truly try it. I was a skeptic. I did not at all believe it was going to help, and it has, significantly. AG1 is totally amazing. No more ibuprofen, no more leg cramps, much less back pain, feeling better and more energy. This is great, and I'm only 2 weeks into AG1. It really works. Thanks, Stephen. You're welcome. I noticed 3 things with AG1. My chronic heartburn is gone. My digestion is more regular. I have more alertness, and I wake up with a raging heart on every morning. I hope you're putting it to good use, my friend. Just received my second pouch of AG1 and find improvement in short-term memory and not napping during the day as I did pre-AG1. Worth the price. Regarding AG1, okay, so I couldn't ignore all the talk. It's been about 3 months now and I've literally stopped drinking coffee because of it. Not even intentionally, I just don't need it now. Strange. Not that strange, AG1 will meaningfully boost energy, at least in my own experience. That's the biggest benefit I noticed almost immediately. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now and let me know how you're feeling in a few weeks. If for some strange reason you don't get the results you're expecting, there's a 90-day money-back guarantee, so what do you got to lose? Oh, that's right. Nothing. And if you'd like to access over 300 exclusive videos, plus have optional access to my Tesla valuation model with loads of assumptions out until the end of this decade, maybe a little bit beyond, join Patreon with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.